Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, the question to ask yourself is, do you have protection from taxes and crashes? And here's why I bring this up. Morgan Stanley had an article I talk about on Hidden Wealth Radio this weekend. U.S. stocks are in a death zone and could sink 26%, according to Morgan Stanley. And I want to talk to you about what you can do right now to protect yourself, and not only protect yourself, but make up for lost time and lost money. And here's where we just got hit with a triple whammy, folks. For those of you that aren't familiar, at the end of this past week, the Personal Consumption Expenditures Price Index, CPE Index. Now, this is the preferred index of the Federal Reserve in measuring inflation. It came in hotter than what they expected. Now, that's one of three, right? The Consumer Price Index came in higher than expected, which is, again, the cost of goods and services, excluding food and energy, right, are already running hot. And the Producer Price Index, which measures the cost of things on a wholesale level, also came in hotter than expected. Now, it's not just Morgan Stanley that's saying this, and this is where a lot of people have reached out and said, look, I need to get an understanding of how I can get some security here, some direction to protect myself. But here's the other unfortunate voices that are obviously sharing the same. Bank of America came out. The stock market likely faces further losses later this year as the possibility of a deeper recession in the second half of 23 grows. JP Morgan, the stock market likely faces further losses later this year as higher interest rates work their way through the economy. And then to make matters worse, right, one of the top economists that I follow, Mohammed El-Arian, says the Fed won't be able to get inflation down to 2% without crushing the economy. It's not the right target, he says. And lastly, Larry Summers, right, who served under Obama, and he was the U.S. Treasury Secretary, said, the risk is that we're going to hit the brakes very, very hard. So think about it this way. When your brakes don't get much traction, right, the Fed not knowing what they're doing and obviously not being able to control the situation, they didn't do enough early, now they're doing too much late, and obviously it's throwing things into a hissy fit. But when your brakes don't get much traction, two things happen. You can be moving too fast, that's the inflation pressure, and you can be setting yourself up for some kind of collision or crash down the road, right, being obviously a recession. Both of those things are very real risks in this environment. Well, folks, I want to teach you. Go to retirementprotected.com. That's retirementprotected.com, and let me teach you what you can do to protect yourself from taxes and crashes. You may say, Chuck, what's this got to do with taxes? Well, folks, when the economy slows and fewer people are paying into the payroll and fewer people paying into Social Security, and the threat of obviously these programs changing, the lack of growth that we'll have in the economy, right, will make things stagnant for the growth of our stock market, right, which is what keeps our accounts up or from going down. Well, not only are they going to be kept from going up, which we're starting to see these earnings reports pushing things, and they're redesigning, as I talked about last week, they're basically redesigning the earnings report calculations to try to make basically a head fake, right? That things won't come across as bad as they really are, not as good as they should be, et cetera. Well, folks, let me teach you that taxes are the next. And I talk a little bit about this on the radio. But there's two things that jumped out at me this week, and I'll leave you with this. One is, this is a USA Today article, can we get rich people to pay more taxes? It talks about how the wealthy and uber wealthy, as they reference, and again, maybe not what you would define as uber wealthy, but pretty much the 1%, which could be just a high income earner, let's say 200,000, 300,000, 400,000 or more, or strong savers. And that's who benefit from the program the most, because that's where the takers are coming, is for the makers. But when you go after the uber wealthy, right, the Bezos of the world with Amazon, et cetera, now you stifle, right, the ability for those companies to continue to employ people, give people jobs, and for those people to contribute to commerce. Well, it's a trickle-down effect, folks. And when you've got articles now coming out on top of that, but with Bernie Sanders and Elizabeth Warren now posing this bold, this was as of Barron's, bold tax hike to shore up Social Security, it's going after the makers. And it doesn't work, folks. And so higher taxes are coming. And unfortunately, the potential of a 26% stocks in a death zone drop is as JP Morgan reported, the time to protect yourself is now. Go to retirementprotected.com. That's retirementprotected.com, and learn what you can do to protect yourself from taxes and crashes. I'll teach you indexing, which will take advantage of what's happening right now, just as it's done in the past major market swings, and also teach you how to do upside without downside tax-free, and create and show you deductions that allow you to untax money that's not been yet taxed, which will be taxed higher later. Folks, you work hard for your money. Let's get to work. Imagine more financial success, less stress, less worry, less taxation, less worry of all this inflation, and protecting yourself from taxes and crashes. RetirementProtected.com, retirementprotected.com.